This would tend to confirm what I sort of heard as a subtext in what the Fed was saying yesterday. Number one was that they are much more focused today than they have been over the past 18 months on the labor market, on the employment side of their mandate. Do you agree?
I do agree. And if you look at the language that Powell used, it was very cautious in what he said. He didn't say he looked at it as weakening. He looked at it as normalizing. Now, the market, if you want to say the sell-off today is economic uncertainty, which I'm not sure I want to say that, but if the market would take that as, well, we have a weakening of the labor market. The Fed didn't go there yet. I thought that was interesting.
Yeah, very, very interesting. And yet today you see that the jobless claims numbers were higher. We'll get the jobs number tomorrow, I guess. Isn't that right? We get it tomorrow. It's early, but we get it. We get it tomorrow. So that will give us further. It adds to the pile of data, doesn't it, that, Dory, the Fed will be using to determine whether or not to cut rates come September. And I assume you would think that they are probably going to do that.
I do. I think he gave us that clear message yesterday about cutting rates in September. I think the real question is he going to have more rate cuts? So now if you look, the market, which has always been at odds with the Fed for the last several years, for some reason doesn't believe what they say. He downplayed future rate cuts, but yet the market did what? It bet on future rate cuts. And now there's a higher probability of 3 rate cuts by the end of the year than 2. And there's a divergence from what the message was with Powell.
Dory, you mentioned that you weren't quite buying economic weakness as kind of behind today's sell-off. What do you think it is then?
It could be a combination, geopolitical, economic. So when you're talking about the sector rotation, this aren't small numbers coming out of big tech, right? They're billions and billions of dollars. So when it starts to move the price, then it starts to cause things. And so some of this, I actually think, is an interesting opportunity to buy. I think the market is not so sold on a weakened economy. The market wants its drug of choice, which is low rates, right? So you see everyone kind of moving. Well, the theory is we go to small caps, and it's been a nice play. But I think you got to be real careful in small caps because over 41% of them aren't profitable. And if you look back at big tech, something like an Nvidia, this big sell-off on a company that has 50% margin and over 100% return on equity, this could be a good buying point.
You happen to like, or you think in terms of drug of choice, that 2 sectors might benefit here. That would be regional banks, as well as payment companies. You list 2 stocks, Huntington Bank shares, and PayPal. Explain your argument for them.
A part of its industry, right? Banks have been very cheap for a good while. And wrongly, the market has thought, well, they can't make money unless they have lower rates. So this rate cut coming up, and maybe 2 or 3, according to the market, will be very good for banks, very good for their stocks. And they had a very good July. Huntington's right there. It's got a good handle on its margin. It has low commercial real estate exposure. It had only two banks in its peer group that actually grew deposits in the last quarter. And it's in a nice position for growth in markets like Texas and South Carolina.
And PayPal?
And now PayPal has been kind of a stepchild as of late, and it's actually cheap. It's a value stock, and they've been beating numbers, and they look really good. And I love the 10 times EBITDA for PayPal. So and consumers are still spending money, and you get rate cuts, they're liable to keep spending. And PayPal numbers look really good, and so I think it's a value play here. Good place to be.
You're a third person pounding the drum on them. I'm starting to take notice. I'm watching the CEO. What do they have up their sleeve on that front? Dory, quickly on big tech then, as you said, there's capital shifting around here. Do people need to go out of their way to avoid exposure to these names?
Well, I think you got to be careful who you're into. We've got Apple coming out later and Amazon, but they both still look very expensive to me. So, you're going like, you mean some of big tech is cheap? Yeah, I still think Nvidia looks pretty good.
You do.
Microsoft, I'm watching pretty close, but I want to wait on buying into the dip on Apple and Amazon. I think I need them to see come down a little bit more.